Welcome to the Immersion Zone. Today we're reviewing the scuba diving industry market size research report by Darcy Kieran.
Hey everyone, and welcome back. We're doing a deep dive today into the scuba diving industry. We've got this market research report, really in-depth stuff. And let me tell you, some surprises in here. For example, did you know scuba diving, back to pre-pandemic levels, but gear sales haven't kept up? Kind of a head-scratcher. So we're going to unpack that, why that is, what it means for the future of diving.
Yeah, one of the things that this report highlights is how complex this industry really is. It's not just about how many people are diving, it's also about how they're engaging with the sport. Are they buying gear? Are they renting? Are they taking courses? Are they traveling? There's this whole question of like, who are these divers?
Yeah, and it turns out the average scuba diver today, not who you might think, more likely to be a millennial, possibly Hispanic, and financially well off, not the retired baby boomer we often picture.
Really challenges our assumptions.
It does.
To get a clear picture, I think we need to break things down a little bit, and this report does a great job of that, dividing the industry into 6 distinct sectors: gear sales, training, travel, repair and maintenance, renting gear, and fill stations. Imagine trying to figure out the size and shape of a 6-dimensional puzzle.
Okay, that's a lot to unpack. But before we dive into each sector, let's talk about the overall size of the industry. The report cites data from the U.S. Bureau of Economic Analysis showing the other conventional water activities sector, which includes scuba diving, brings in over $10 billion per year, which sounds huge.
It does sound huge.
Yeah.
But remember, that category, it lumps scuba in with all sorts of other water sports, stand-up paddling, surfing, you name it. When you isolate scuba, it's actually a pretty small piece of the pie, less than 9% of the total outdoor recreation industry in the U.S.
So maybe not the economic powerhouse, some people think, but still, significant chunk of change for those of us who love to breathe underwater.
Absolutely. Even getting reliable data within that sector is tricky. The report cautions us against these inflated industry estimates, especially those that confuse direct spending with overall economic impact. For example, should we count? Low-end snorkeling gear from Walmart, one we're talking about. The scuba market. What about freediving gear? It gets complicated quickly.
So let's try to untangle things. By looking at participation, the report cites the Sports and Fitness Industry Association, or SFIA. They conduct large-scale surveys. Their data shows scuba back to pre-pandemic levels in the U.S., which is great news. But there's a twist here.
There is a twist. The growth is primarily from casual divers, those who might go out a few times a year. The core divers, the ones who are out there every month, they're actually declining. This has a ripple effect on the entire industry.
That's interesting, because I immediately think, are those casual divers buying gear? Probably not as much as someone who's diving constantly.
Okay, exactly. That's one explanation the report offers for why gear sales are lagging behind participation. Casual divers are less likely to invest in a full set of equipment, especially with the growing popularity of rental options and secondhand markets. The report even has data showing that buying used gear is becoming increasingly common. What about you? Have you bought any gear recently?
Actually, no. Been considering it. But the rise of these big retailers like Decathlon, making me think twice, their prices are very competitive. Which is great for consumers, but it puts pressure on traditional dive shops.
They're definitely shaking things up. This ties into another intriguing point the report makes. It suggests the global wholesale dive gear market is significantly larger than official estimates capture.
Really?
Why? Because traditional data collection methods often miss direct-to-consumer sales happening online and through these large retailers. It's like trying to measure the size of an iceberg.
By only looking at the tip? Okay, so we got participation up, driven by casual divers, but gear sales are lagging. And the way people buy gear is changing. It's a complex picture, but it's starting to make sense. Now let's
shift gears
and talk about training. What's happening there?
Training sector showing some intriguing dynamics. One of the most striking findings is that tech diving training is actually doing better than entry-level training.
Wait, really?
Yeah.
What's driving that trend?
Well, the report points to a few factors. Tech diving is often seen as more specialized, more adventurous, attracting a different kind of diver also. The training is typically more intensive and expensive, which can be a plus for dive centers looking for higher revenue streams.
It also seems like there's this whole hidden market of independent instructors that the report mentions, people who operate outside the traditional training structures.
Right. And you have training agencies selling directly to consumers online, bypassing dive shops altogether. This makes tracking the number of people getting certified each year even more challenging. But here's a really mind-blowing statistic. The report estimates there are 6 million scuba tryouts, like discover scuba diving, globally every year. If you think about it, that's a massive potential market that often gets overlooked in industry calculations.
Wow, that's incredible. It makes you wonder why more businesses aren't capitalizing on that.
It really does. It highlights the need for the industry to think outside the box and explore new business models. Focusing solely on certifications and gear sales means missing out on a huge pool
Fair.
of potential customers.
So far, we got this complex puzzle with participation up, but driven by casual divers, gear sales lagging, tech training thriving, and a massive untapped market of scuba tryouts. I'm starting to see the pieces fall into place, but I'm also realizing just how intricate this industry really is. What else does this report reveal about the inner workings of the scuba diving world?
Well, next, we can delve into the financial health of some of the major brands, like Scuba Pro, Mares, and Aqualung. The report managed to uncover some fascinating insights, even though these companies are often very secretive about their numbers.
All right, let's dive into these financial deep waters. You mentioned the report has some insights into brands like Scuba Pro, Mares, and Aqualung. I imagine it wasn't easy to get those numbers, was it?
Not at all. These companies are notoriously tight-lipped about their financials, especially the ones that are privately held. But the report managed to pull together some intriguing pieces of the puzzle.
Well, let's see what they uncovered. What do they find about Scuba Pro?
Scuba Pro, being owned by Johnson Outdoors, a publicly traded company. This is a bit easier to track. Their latest reports show a strong rebound since the pandemic, with 2023 being their best year in over a decade. That suggests at least some segments of the dive gear market are recovering nicely.
That's encouraging news for gear manufacturers. What about Mares? I remember they used to be publicly traded as well.
Yes, but they went private back in 2015. The report pieces together some of their older financial data, but it gets murky because Mares has expanded. Beyond gear, they now own SSI, a major dive training agency, and Revo rebreathers. So isolating their dive gear revenue is tricky.
There's that six-dimensional puzzle again, always keeping us on our toes. Did the report manage to dig up anything on Aqualung?
They did, and this is where it gets really interesting. Back in 2003, there were estimates that Aqualung was raking in about $200 million in annual revenue. But more recent estimates from 2016 put that number closer to $113 million.
Wow.
That's a pretty significant drop.
What happened? Did they lose that much market share?
It's hard to say for certain without access to their detailed financials, but it's worth noting that Aqualung, like many other brands, has diversified its product lines. They're not just about scuba anymore. They also sell snorkeling and swimming gear. That could be impacting the revenue numbers we see.
So maybe it's not a simple case of losing ground, but rather a strategic shift in focus. It seems like diversification is a common thread among these big players.
It definitely appears that way, and it makes sense in a market that's becoming increasingly fragmented.
Okay, so we've got these global brands navigating a complex and evolving market, but the scuba world isn't just about big companies. Let's zoom out and look at some regional differences. The report compares the U.S. market with Europe, specifically Germany. I'm curious to hear what they found.
What's fascinating is that we see distinct spending patterns between American and European divers. For example, the German Dive Industry Association data suggests the German divers allocate a much higher percentage of their gear budget to scuba units, regulators, BCDs, and instruments.
Interesting, so they're more focused on the core scuba equipment.
It seems that way. In contrast, American divers tend to spend a larger portion of their budget on fins, masks, snorkels, and accessories. This could reflect the fact that resort-based diving, where some of that equipment might be provided, is more prevalent in the U.S.
That makes sense. And what about dive travel? The report also mentions the Australian market, which seems heavily reliant on tourism.
Australia offers a fascinating case study. The data reveals that a staggering 77% of all dive-related spending in Australia comes from tourists. That's compared to just 23% from Australians themselves. It really highlights the crucial role that dive tourism plays in certain economies.
It seems like location plays a huge part in shaping the scuba diving market. But now, let's address the topic that I know is on many listeners' minds. The future of dive shops. Is opening a dive shop even viable in this changing landscape?
That's a question many are asking. And the report doesn't sugarcoat the situation. The data shows a steady decline in the number of dive shops in the U.S. over the past few years, a trend that was accelerated by the pandemic.
So our brick-and-mortar dive shops,
Yeah.
destined to go the way of the dodo.
Not necessarily, but the report makes it clear that they need to adapt to survive. The old model of relying heavily on entry-level certifications and gear sales simply isn't sustainable anymore.
So what's the solution? What does a thriving dive shop of the future look like?
The report suggests that dive shops need to embrace diversification and become more than just a place to buy gear. They need to become hubs for experiences, offer specialized training, and cater to the needs of both core and casual divers.
So perhaps offering things like tech diving courses, free diving classes, or even stand-up paddleboard rentals.
Exactly. Dive shops need to evolve into one-stop shops for all things aquatic, offering a broader range of products and services that cater to a wider audience. They need to be community hubs, places where people can connect, learn, and share their passion for the underwater world.
That makes a lot of sense. The report also mentions some interesting data from the Business of Diving Institute. What insights did their surveys reveal?
Their research highlighted some surprising things about the market, particularly the vast number of people who have actually tried scuba diving. In fact, one of their surveys showed that nearly a third of Americans have tried scuba at some point in their lives.
Wow, that is a lot. Seems like there's a huge potential market for scuba. But as we talked about earlier, the conversion rate from trying it to actually getting certified, incredibly low.
Exactly. The report highlights that only about 3% of those who try scuba diving actually stick with it. That's a massive dropout rate, and it raises some crucial questions for the industry.
Well, what's preventing people
Yeah.
from taking that next step? Is it the cost? Is it the perception of risk, lack of convenient dive locations? Understanding those barriers could be really helpful, I think.
Absolutely. The industry needs to figure out why people aren't making that leap.
The Business of Diving Institute
Yeah.
also did a survey on how much divers spend annually, and I found that data really fascinating. There's a big difference between what core divers spend and what casual divers spend.
Yeah, that's right. It shows that in the U.S., core divers spend an average of $2,755 per year on diving, while casual divers spend around $684. And that spending covers everything, from gear and training to travel and other services.
Even though casual divers might be the majority, paradivers are still big spenders.
Exactly. And that's why it's so important. For dive businesses to cater to both groups, they need to offer experiences and products that appeal to both the casual diver, who might just be dipping their toes in, and the dedicated enthusiast, who's all in.
Yeah, striking that balance,
Yeah.
appealing to a broad audience while still catering to the needs of the core group. That's driving a lot of the revenue. And the report suggests this isn't just a U.S. thing. Similar spending patterns are emerging in Europe, too.
Yes, the data from Germany, for example, is quite revealing. It shows that a core diver in Germany spends over 10 times more on dive gear than a casual diver, and that initial gear purchase is a significant chunk of the overall dive gear sales.
So figuring out how to attract and retain those core divers is crucial for the industry.
Absolutely. It's about providing high-quality training, offering a diverse range of specialized equipment, and fostering a sense of community that keeps divers engaged and coming back for more.
Okay, so we've covered a lot of ground here. We've looked at the challenges of measuring the scuba industry, the changing demographics of divers, the disconnect between participation and gear sales, and the need for dive shops to adapt and diversify.
Yeah. And if we take a step back and look at everything we've discussed, it all boils down to a fundamental question. What's next for the scuba diving industry?
Well, the report actually proposes a solution. I think it's a pretty brilliant one. They suggest creating a standardized method for the industry to accurately measure its size, which would involve collaboration between training agencies, manufacturers, retailers,
And dive operators. That's a huge step in the right direction. Having access to reliable, comprehensive data is essential for making informed decisions, attracting investment, and ensuring the long-term health and sustainability of the industry.
So what does all this mean for you, our listener? What does it mean for the future of scuba diving? Well, it means that the industry is at a crossroads. It's facing challenges, but it also has incredible potential. And the future of scuba diving really depends on everyone involved. Divers, businesses, and organizations working together to adapt, innovate, and create a sustainable path forward for this incredible sport.
Couldn't have said it better myself. The report ends with a call to action, encouraging everyone in the scuba community to participate in future surveys, share their insights, and be a part of shaping the industry's direction. So we encourage you, our listener, to visit the report's website, share your thoughts, and be part of the conversation.
What would you want to know about the future of scuba diving? Let us know, because ultimately, the future of scuba is in our hands. Thanks for joining us on this deep dive.
Thanks for listening, and please subscribe to The Immersion Zone wherever you are listening to this or at www.theimmersionzone.com. Thanks. Dive safe.